開隻，係咪？早晨各位。
Good morning, members. This is the panel on the financial affairs meeting. I call the meeting to order. There are 3 minutes received since the last meeting. They are one on the 8th of January, one on the 5th of February, and one on the 5th of March. They are paper number CV bracket 1830883 and 924/17 to 18. The Secretariat has not received any proposals for amendments. If you don't have any objections, I ask members to endorse these 3 minutes. Information papers issued since the last meeting on the 3rd of April. We have received 4. You will find the list of papers on the agenda. The next meeting, the one that takes place on the 4th of June, and items for discussion. The 4th of June is a Monday. The next meeting will take place in the morning. The administration proposes 4 items. 1 is briefing by the Financial Secretary on Hong Kong's latest overall economic situation. It happens once every 3 months. The second one is proposed amendments to remove ring-fencing features from the tax regimes for offshore funds. The third one is legislative proposals to update the financial resources requirements for licensed corporations. This is a legislative proposal from the Securities and Futures Commission. The fourth one is proposed amendments to the Occupational Retirement Schemes Ordinance Cap 426. The next meeting will be between 10 o'clock and 12:45 for these 4 items. Any views, Mr. Charles Mock? You were going through them very quickly. Mr. Dennis Kwok has sent a letter in relation to ICO as well as cryptocurrency. The administration gave us a paper. It contains some answers. However, Mr. Kwok asked for the item to be included in the agenda. Chairman, would you put this item on the list of outstanding items for discussion to ask the administration to come to talk to us instead of just sending us a response paper? The publications, say for example Wall Street Journal, New York Times, every day nearly there is an article about update on international regulation or challenges. So they can't just give us a page or 2 to tell us that they keep in view the development in the international arena and will come to us in due course. They do have to come to us to talk to us and answer questions. Of course, I have Mr. Dennis Kwok's letter and I have read the administration's response paper. Well, there may be questions asked of the Financial Secretary about ICO as well as cryptocurrency during the briefing by the FS. I do hope that it will be a separate item. Yes, I can do that. We will ask all sorts of questions when the FS comes to us. If it is in the list of outstanding items, it may take some time. I will inform the FS that in June there will be questions in this regard. If there is room, I will include it in the July meeting, but I don't know whether there will actually be a meeting. I'll just ask the FS and his team to prepare for questions in relation to cryptocurrency and initial coin offering, ICOs. If you're not happy with the answers given by the FS in June, then I will put this item on the list. Mr. Ronick Chan, I see that when it comes to the development of the Bay Area, the date is to be confirmed. It won't happen in June, and in July you say that there may not be a meeting, but we have already finished with the visit. I hope that this item will be discussed as soon as possible. When I say that there may not be a meeting in July, it means that there may be one. If there are no other items proposed by the administration, we will surely have a meeting because we already have 2 items. When it comes to the Bay Area, I think it is better to have a joint meeting because it involves IT, information technology, commerce, and development. So I'll see if we can arrange for a meeting. I will inform Mr. Jeffrey Lam about members' view. Hopefully in July or before that we will be able to arrange for a meeting. Any other views? If not, we'll go into the first item. That is the annual briefing on the work of the Financial Reporting Council. Mr. Ronick Chan, you just raise your hands to ask questions, right? Wu Chi Wai, Holton Chow. Please ask the administration to come in.
Good morning, Paul. Good morning. Okay, since we are running a bit late, Paul, could you please make your representation? Well, we have about 5 minutes. If you can do that within 5 minutes. Thank you. Paul, thank you.
Okay. So, Chairman, you have some slides which are in both English and Chinese. If you don't mind, I'll speak to the English version, but you can have the Chinese version in front of you. I will go through this fairly quickly to enable time for questions. The agenda, the agenda here is just for you to read. I'll go through each of the headings as I go through this presentation. So, on to the next slide. We had a decade of achievements. This was our 10th anniversary in 2017. And so I summarise here what we've done in that 10 years. As you can see, we have handled and received over 400 complaints in those 10 years. Completed 56 investigations, 11 inquiries, and 8 listed issuers were requested to amend their financial statements. We referred 69 investigations and complaints to the HKICPA, and 39 sanctions have resulted from those 69 referrals. The majority are still in the progress of the HKICPA, so it's not that, that nothing has come of them at this stage. We also referred another 101 complaints, which we received again from a single source directed at a single audit firm. And we are informed they will take those up in 2018. Next slide. Again, operation statistics. The first 4 columns are in our annual report, and so you can see them there. I put in here a column to update you to as recent as last week when we had a council meeting, so it's completely up to date. We've received in the first 5 months 64 pursuable complaints. Of that 64, approximately 50 have come from a single source related to one audit firm, which means about 13 or 14 have come in this year. That's a big increase compared to the last 2 years, where in the first quarter we only had about 4 or 5 complaints in the first quarter. Now we've got 13. But more importantly, more of these complaints have come from members of the public, which I think is good news. The financial statements will be selected in the second half of the year, once we've seen the annual reports that have come out. We've completed in the period 4 investigations, and we have not managed to complete the inquiries as the relevant financial reporting review committees are still meeting. And we've increased our staff complement in 17 and just recently in 18, and again the percentage of professional staff has increased from 58 to 59%. In terms of complaints, as I've said, 64 pursuable complaints. In the current period, we've referred 35 to other agencies, and we have 16 in progress, which is not bad at this time of year, because usually there's a larger number in progress at this time of the year compared to year end. So I'm quite comfortable with where we are on complaints. On investigations, similarly, we have revised some of our procedures to make them much closer to the requirements of the Ordinance in terms of our actual procedures, and so I had expected a little bit of a slowdown in cases actually completed. But there are more in progress, and I expect this year we will reach the sort of levels we've achieved in prior years. The work we've done during the year, we did a comprehensive review of our procedures on inquiries and investigations. We linked every procedure with specific requirements to the relevant legislation in the Financial Reporting Council Ordinance. And this has ensured that we have effectiveness and quality to our work, and natural justice prevails. It was quite a long exercise to do that. We continue to meet with other regulators, both in Hong Kong and overseas, including dialogue with the MOF. We participate in regional regulators' meetings. We've been in touch with IFIAR, and the UK FRC paid us a courtesy visit during the year, and we established very close relationships with them. And in fact, later this week I'll be talking to them again about some of our operations. Some of you are aware of the auditor regulatory reform. I just want to reiterate that we 100% support this bill. 100% support the bill. There are discussions about accounting and auditing expertise. We currently make use of current accounting and auditing expertise in our existing investigation work. We have stated we will continue and in fact enhance that and expand it under the new reform. That is our stated intent. We would like to refer to international best practice, and in that regard we still consider that dual recognition by both IFIAR and European Commission should be pursued. We have done significant outreach and briefings to professional accounting bodies, all of the accounting professional bodies and others, and we have done outreach to all of the audit firms that audit listed companies. The last of those outreach meetings will happen later this week. Looking forward, we will continue to uphold fairness, natural justice, and act in the public interest. These are the pillars that we operate on, and will continue to do so. At the same time, we will prepare for our new role as a fully fledged independent auditor regulator for Hong Kong. That's my presentation.
Oh, thank you, Mr. Winkleman. 手頭上有4位同
We have 4 Members, Chen Zhanying, Wu Jiwei, Holden Zhao, and Mr. Wang Dingong questions. Mr. Chen Zhanying, 4 minutes. Thank you, Chairman. The first question I have is about the FRC corporate governance. I see they have 5 committees, and one of them is corporate communications. So that FRC is a low-profile body, so why would they have a communications unit? And I see that they will set up strategies, they will report their findings and so on. Now, I have a lot of respect for the members, Mr. Xin Zhonggai and so on. But actually, what is this communications branch doing? Because in the FRC report, in the paper, I do have some comments. In paragraph 14, it says that they want to ensure that their work is of the highest efficiency and level. And paragraph 31 says FRC has 21 staff members. They are professional. They have a high level of expertise and so on. And then it says that they have very enthusiastic management team. Do we need to really use these adjectives? And there's also a spelling mistake somewhere. So the second question I have is, there was a previous concern, but there's no paper dealing with that. We have some cross-border auditing. Now, listed Hong Kong companies, a lot of them are from the mainland, so we do need cross-border auditing. And if there are problems with auditing, it will involve cross-border work. So the FRC, how does it deal with cross-border auditing? How do they collect information on investigations in 2015 to 2017? A lot of work has not been completed, so what's the latest progress? Thank you. Who can take that up?
In terms of mainland auditors, perhaps I'll deal with that first. Going down a bit. There's not much we can do currently in terms of getting access to working papers for audits conducted by mainland auditors, or indeed Hong Kong auditors where they did the work on the mainland. We're in negotiations with the Ministry of Finance on getting that access, and they continue to listen to us. It is a requirement there be a memorandum of understanding, but we have failed to reach agreement so far. In terms of mainland auditors, this is under a scheme called a convergence scheme, and it's an agreement between 9 parties. In order to get changes to that agreement, all 9 parties need to agree to that change. It's not something that can be legislated. At the moment, we have several investigations that are temporarily on hold until we can get access to those working papers. And just to answer a question that may have come again, we do not pursue those working papers from the audit firms until there is an agreement. So there is a weakness there which we're trying to address. In terms of why we need communications, I agree with you. We have been very low profile, and purposely so since our inception, because we do not do discipline and we do not make decisions on the ultimate outcome of investigations. That is the role of the HKICPA. However, we do have a manager, and she's extremely busy because we need to revamp our website, which needs substantial updating. We have our annual report to be issued. We do get regular media inquiries, and we do produce short press announcements after every investigation is complete.
And how large is your corporate communications division?
1 person.
1 person only, okay. Oh, 下位胡志偉議員。多謝主席。
Mr. Wu Jiwei, I'd like to ask the cross-border auditing. It was said that you need to have an agreement with the mainland. So could you elaborate on this agreement? Do you have a timetable, and are there any obstacles that lead to this delay? Because we need to talk about auditing standards, and we'd like the legislation to be endorsed to have a more clear position. So we need to have the legislation, and that would help assist in our development.
Let me just clarify. Mainland companies that list in Hong Kong can either have mainland audit firms audit their accounts, but they can only be presented in their Chinese accounting standards. The majority of large mainland operations are audited by Hong Kong audit firms over which we have complete regulatory control. There are only 11 firms, including the big four in China, and I think the number was about 35. I need to check that number, sorry. 56 companies out of 2,000 companies that are listed here. So it's a very small proportion. So that's the first thing. It is a very small proportion, but there is a regulatory gap, I will admit. Now, the original agreement was signed by 9 parties. If I can remember the 9 parties quickly, they are the HKICPA, the FRC here, the Hong Kong Exchange, the SFC, the Ministry of Finance in China, the CSRC, the CICPA in China, and I've forgotten two others, but they're all part of that agreement. Any changes to that agreement will need to come through those parties by agreement. You cannot change this by mere legislation. Now, I know that the MOF are already asking questions and looking for changes. I also know that in 2015, when the MOF changed their laws on access to working papers, they stipulated that memoranda on examination would have to be entered into, and they are very keen to do so because they've not entered into any yet. And we are in serious negotiation on that. I don't have a timetable other than I would like to have something in place at around the same time that our bill is enacted.
Okay. 唔該晒。咁我諗我另一部分想問下就係因為我見到咧。
The other question I have is I see that the FRC has handled 400 cases, complaint cases, and I don't understand what it says that when you receive a complaint and you handled 400 and there are 56 completed cases and 11 are still under investigation. So the remainder, what status are those cases in? And you say that cases were referred to the accountant association, and it seems to involve just one accounting firm. So will we have a timetable on the investigation result and what the timetable is for follow-up action?
In 2016 and in 2017, we had approximately 100 complaints in each year which appear to have come from the same source, member of the public, and were directed at a single audit firm. None of those complaints were of sufficient stature to warrant an investigation. As a result, we refer them to the HKICPA for them to look at, hopefully under their practice review or any other action they would like to take. But none of them warranted, and we did check, none of them warranted an investigation, as there were minor errors like typographical errors, inconsistency between page numbers, nothing that would say the financial statements are incorrect or that the audit opinion was incorrect. So they did not warrant it. So that accounts for 200 out of the 400 over the last years. As I said, this year they've continued. We have been approached by the firm concerned, who have taken this seriously and have adopted changes to their procedures in terms of quality that came into effect for their December 2017 year-ends audits, and we're waiting to see the outcome of those audits to see if those operations have in fact achieved the goal.
Okay.
Well, can I understand it that the remaining 200 cases, there's insufficient evidence for FRC to conduct investigation?
No. The remaining complaints that come in, some of them are dismissed, there's nothing to follow up, or they don't fall within our remit. Sometimes they're about something that we have no control over, and we cannot. And we refer to other agencies.
Okay. 周浩鼎議員，下一位，唔該。
Mr. Holden Chow. Thank you, Chairman. I'm aware that the FRC is preparing to waiting to be a member of the European Committee. So we are aware that we keep talking about meeting international standards and aligning with international standards, but I'm aware that in the paper it says that the European Commission equivalent qualifications have a requirement, that is, the regulatory body needs to have all the members to be non-practicing members. So I want to ask, earlier on I was aware that the media have been reporting saying the industry is worried if the governance is all made up of non-practicing members, then will they be out of touch with the industry practice? And of course I understand that if all members are non-practicing members, we want to have an independent regulatory regime. We don't want to be self-regulated. Maybe that's their intention, I understand that. So I want to ask the FRC, in the membership arrangement or the proportion, is there any more room for having non-practicing members and practicing members to change that proportion? So maybe we can increase the number of non-practicing members, and can we still reach our intention?
This will give the impression that it is an independent regulator. So I would like to get some views. Mr. Au, perhaps I will start, because this involves the reform promoted by the government. The bill introduced to the LegCo, there is a part which is the proposal of the composition of the Financial Reporting Council. The CE will appoint at least 9 members. The number of non-practitioners will have to be more than practitioners, and at least 2 members will have to have accounting and auditing expertise. This ensures that the governing body will be independent, and at the same time there will be sufficient professionals to perform its statutory functions. After we have introduced the bill to the LegCo, we have received different views. Some stakeholders are of the view that after the reform, the Financial Reporting Council should comprise of non-practitioners. That is, in order to get the regulatory equivalence of the European Commission. At the same time, we have received opposing views saying that there should be members with accounting and auditing expertise, and the number should increase. And there is also a suggestion that the minimum number of members with accounting and auditing expertise should be set. There are diverse views. The ultimate goal of the auditor regulatory reform is to enhance the independence of the Financial Reporting Council and to enhance investor protection. We hope that Hong Kong will become a member of IFIA, International Forum of Independent Audit Regulators. We do think that the legislative proposal in the bill will achieve that goal. Next, Mr. Wong Ting Kwang. The Council has been in place for 10 years. As Mr. Winkleman said, that you have been keeping a very low profile. people from the industry actually have little knowledge about the council. Do you have any plans to enhance your profile to the public, say for example the work you have done, so that people will know about your structure and your work? Currently, there is no power for the council to impose sanctions. So from 2016 and now there are 133 cases being referred to specific institutions. I would like to know that out of the 143 cases referred to specific enforcement agencies, what is the result? Have you followed it up? Third question is, well, there is the Financial Reporting Council Amendment Bill 2018. What is your expectation in relation to this legislative proposal? Who is to start first? Mr. Winkleman?
Okay. In respect of the complaints that are referred to the HKICPA for disciplinary, we have referred since inception 69 cases to them, excluding the complaints that did not lead to investigation. 39 of those ended up with sanctions against either the firms or the individuals. The vast majority, almost 30, are still in progress within the HKICPA, and I cannot comment on them. We do follow up on every single case in our quarterly meetings, and we check to see where they have got to. So we do not just leave it there, we check, and we have discussions about how long it takes for them to go through their disciplinary process as well. So that I hope answers the question on do we follow up. I've just forgotten the first part of the question, sorry.
About the publicity of the FRC.
Well, the problem has been that our work is purely investigation, and that's all we can do. And we cannot publicize the fact we've carried out an investigation and name the parties, because they cannot be named until any disciplinary process, which is the remit of the HKICPA, is completed, so that natural justice prevails. Otherwise, one is being accused in advance of the trial by the disciplinary committee.
So one more question is about the aspiration for the bill on FRC. What do you want to achieve? Yeah.
What I want to achieve out of this bill is the bill gets through in as smooth a way as absolutely possible. That is what we believe is in the best interest of Hong Kong and is in the public interest, and why we fully support the bill as it's presented. So that is my immediate goal in working very closely with FSTB on this. I stress that time and time again. At the end of the day, we support government's intent that we bring Hong Kong in line with international practice in the local context, and that we do get recognized internationally.
Thank you.
Next, Mr. Christopher Zhang. Thank you. Well, according to the paper, as at 2017, there are 40 cases under which investigation is not completed yet. They need to get confirmation from the Ministry of Finance in order to get the working copy of audit papers before they can proceed. So in relation to the 40 cases, how many of them involve requiring access to auditing papers from the mainland? And it's been some time. Investors are very concerned about the result of the investigation. Can you tell us, give us an update of progress will you sign an MOU with mainland authorities? The second point is that in relation to the 40 investigations, how many of them involves new stocks being listed? How many of them involves mainland companies being listed in Hong Kong? Mr. Winkleman.
Okay. I can't give you the actual number that are held up because it is confidential at the moment. But what I will say is that I am comfortable that our investigations are moving forward for all of those that do not involve access to mainland working papers. We are actively pursuing a memorandum on understanding. One of the problems has been, and this will be solved by the passage of the legislation, one of the problems has been that we are not a fully fledged regulator with all the powers of inspection, investigation and discipline, and we're therefore not on the same working level as the Ministry of Finance. And that is a problem to them, as they will only deal with regulators that are on a similar level to themselves. Much as I said, that happens throughout Europe. That's why I'm so confident we will get a memorandum of understanding once this bill has been enacted and before it takes effect. I'm pretty confident about that.
Zhang Yuan.
Mr. Zhang, I would like to ask, what organizations can be on the same level as the MOF, because investors in Hong Kong have been waiting for a very long time. I don't want this to be delayed anymore, resulting in a total loss. Mr. Au or Mr. Winkleman?
To hear you say that, but the sort of regulators are those that are independent of the audit profession. And currently, the HKICPA, as the regulator, does not meet those requirements. As soon as we meet those requirements, things will run much more smoothly, in my view.
Mr.
Zhang, I think we have to find a solution to resolve all these problems. Otherwise, there will be more and more similar problems. The losses suffered by investors will accumulate, which is not conducive to development of the market. I'm sure that's heard. Mr. Wong Ting Kwong, you have a second round. Anyone else? If not, Mr. Wong, you will have 3 minutes. Thank you. Just now, Mr. Winkleman perhaps have misunderstood my question. I think that the Financial Reporting Council, well, it's not the case that I wanted you to publicize the cases under investigation. Well, if I have not been the chairman of the bill, I would not have known about the existence of the Financial Reporting Council and its functions. So you will have to do a better publicity work. It's about your work. It's not about the investigation and cases, because that is subject to confidentiality. We do understand that there are lots of departments, say for example, Insurance Authority, Hong Kong FA, SFC. We know about their functions, but it seems that the Financial Reporting Council is a body that handles the work of auditors and accountants. So had it not been for the bill, I would not be able to tell what the Financial Reporting Council is. Mr. Winkleman.
First of all, my apologies if I did misunderstand your question. Secondly, our corporate communications manager is new. She only joined in the middle of April. Just the other day, I suggested to her that we need to entirely revamp our website so that people do understand how we operate. My predecessors always operated on the basis that we were purely an investigator and did not come to conclusions on things and therefore had a low profile. So I actually agree with the learned gentleman that there's quite a lot to be done to raise the profile of the FRC. And since I've joined as CEO, that has been one of my priorities. And I look forward to that coming to fruition as the bill progresses.
Thank you. I think that concludes first agenda item, and thank you very much.
Sorry. Mr. Au. I thank Mr. Wong's views, and we will work with the Council to see how we can enhance understanding of the work of the Council amongst the public. Thank you. This is the end of this agenda item. I thank you all for coming. Let's invite the team for the next item to come in to join us. It is a briefing on the work of the Hong Kong Monetary Authority. Well, I would like to say this to Mr. Charles Mok. We have talked to the Hong Kong MA. If you have questions about cryptocurrency and ICO, the Hong Kong MA is happy to answer questions in this item. So you have 2 or 3 occasions to ask your questions. Let's invite the Hong Kong MA to join us.
咦，有冇個座位表？得。Howard Dairy。好，早晨各位金管。
Good morning. I'm going to dispense with the introduction. We have a lot of information for us to digest. Perhaps I will ask Mr. Chan and his team to take us through the PowerPoint presentation. Thank you. There are 6 areas that I would like to cover about the work of the Hong Kong MA. First is in relation to risk assessment of Hong Kong's financial stability. Last year, the economy was doing quite well.
So we had some new economic development, and that has continued through this year. So we can see in the blue bar the emerging economies, their growth rate for 2018. The forecast has been adjusted a little bit. It's at 2.5. So for emerging markets, it's 4.9%, and next year it will be at a similar level. So given the good start, we do have some change in market sentiment. This is the U.S. equities market, the S&P 500 change. So after the end of January this year, there was a sell-off. The first sell-off was job data from the U.S. There was inflation concern, and the stocks fell 5%. The second round of sell-off was some friction between China-U.S. trade. There were some worries, and it fell another 5%. So we see this market sentiment is not just limited to U.S. stocks. We see that in Hong Kong stocks, there was also a drop, a 9.5% drop and a 6.4% drop. So emerging markets cannot escape unscathed. There was a drop in these 2 periods as well. So here we have the VIX, the volatility index, the expectations of volatility, and last year it was a very low level, so the market was optimistic, but this year, from the beginning of February or the end of January, volatility went up. So low volatility period has ended. So back to the global financial environment. There are a couple of trends. we see that the monetary conditions are tightening. We know that the U.S. Fed, they are already normalizing their balance sheet. They have a schedule, and they stated clearly that from now they will reduce there's a monthly maximum pace of reduction of 30 billion to 50 billion starting from October 2018, and the rate hike may be faster than expected. I'll explain that later. And the third point is there is a tax reform in the U.S., and the fiscal deficit in the U.S. may push up U.S. interest rates. We're also worried about trade protectionism in the U.S., and of course the focus will be on U.S.-China trade, whether there will be a trade war and trade friction. So that is a fast-changing environment, and we now see that there are high-level negotiations between the U.S. and China, and there wasn't much progress after the first round of talks. So Mr. Liu He is on his way to the U.S. for a second round of talks. We also have geopolitical tension. There seems to be some tensions easing in the Korean Peninsula, but we also see that Syria, the Middle East, and America withdrawing out of the nuclear agreement in Iran. Last year, the U.S. had a good economy. There were 3 interest rate hikes, but last year, the U.S. dollar had devalued against a basket of currencies, some 10%. And this year, we foresee more interest rate hikes, but the greenback might not weaken, it might even strengthen. So when it strengthens, it means that emerging market economies will face pressure. And I see Argentina and Turkey, they are facing fund outflows, and they have a very obvious depreciation in their currencies. Now on rate hikes, we had explained before, the Fed projects the interest rate trends. In the March meeting, they suggested a total of 3 rate hikes, but if you look closer, 7 out of 15 members expect there will be 4 hikes this year, and of course 6 feel that there would be 3 hikes. So that is the view on interest rate trends. We also see U.S. tax reforms leading to a widening of fiscal deficit by up to $1,500 billion in 10 years. Now, we're also familiar with the inflation. The unemployment rate is very low. It's at 3.9%. If we have faster economic growth and faster increase in wages, that would lead to more inflation. Now, we talked about trade wars. To a certain extent, it would lead to higher import prices and inflation. Actually, the 10-year U.S. Treasury yield had rose above 3%, but it's sticking around 3% level. So we talked about the Fed and its projections. So they had raised the projection a little bit in March. In the gray line, the line below that is the market expectations, and we see market expectations have been lower than the Fed members. So the latest projection to 2020, there is a 60 basis point gap. So the market expects the rate to be slower than the Fed's expectation. So we mentioned just now, we're worried about Sino-U.S. trade conflict. Starting in January, there were tariffs talks, and the U.S. mentioned that, and then the U.S. They implemented a Section 301 investigation and had tariff of 50 billion worth of 1,300 Chinese high-tech products. So this trade conflict is not beneficial to any side. So can we find some compromise? It's unknown. Mr. Liu He is on his way to the U.S. for some talks today. And here we talk about the trade conflict. It spills over to the rest of the global supply chain. And we want to say that last year in 2017, China's trade surplus was 375.2 billion. That's a large figure. But if you look, 1/3 of the goods are high-tech goods. And amongst these high-tech goods, half of that is imported parts and components. So these high-tech goods come from Japan, South Korea. So the bilateral trade, there's a big gap, and last year it was a $200 billion US trade gap. So if there's a real trade war, it doesn't just affect China's exports. The other supply chain countries will be affected. So the conclusion is the red line, the world GDP growth, the world trade, they are highly correlated. So they have a cause and effect relationship. If trade drops for different reasons, it would affect global growth. So there's no winner, there are only losers in a trade war. So moving on to mainland China, we see in Q1 growth is robust, 6.8% year on year, and we expect that it's going to be 6.6% this year. Industrial production, fixed asset investment, it slowed down at the end of last year, but it's picked up a little bit. In the government work report, we have some highlights. They want to enhance the quality of economic development and cut outdated steel and coal capacity. That is overcapacity in those areas. And another highlight is to push ahead with the reform of state-owned enterprises, as well as market and financial reforms. We note that China had announced they relax foreign investment in financial industry, including equities, futures, asset management. In the past, there was a limitation on foreign ownership, and now it's being relaxed and waived. And the third highlight is to guard against major financial risks. So perhaps we need to come back to the situation in Hong Kong. The red line is the 1-month LIBOR, the interbank offer rate, and the blue line is the interbank rate. So from 2015, December, when Fed rose rates, and the second, and last year we had 3 rate hikes and 1 hike this year. So we see the 1-month interbank rate is going up, and we see that the blue line in Hong Kong, it's going up, but we see the rate is lower than U.S. rates. So under these conditions, when U.S. rates are obviously higher than Hong Kong, that would give rise to incentive to people converting to U.S. dollars to enjoy a high interest rate. So we see the Hong Kong dollar, U.S. dollar exchange rate starting from 12th of April. It touched 7.85, and according to our linked exchange rate mechanism, when we touch 7.85, the MA will intervene in the market to sell U.S. dollar and purchase Hong Kong dollars. So in that period, in the middle of April, we purchased, sold 6.5 billion U.S. dollars and purchased Hong Kong dollars in exchange. So this figure You've seen this before. That's our monetary base, the composition of our monetary base. We have three components on the top. The green bar, that's the cash, and we also have exchange fund bills and notes, and the blue is our aggregate balance. That means in our banking system, in the balance in the MA for payment purposes. So we see in the aggregate balance, we purchased Hong Kong dollars, 50 billion Hong Kong dollars. The whole pink and blue part is highly mobile. The banks can use that for payment. So the liquidity is still very high in Hong Kong, and we see after 2008 we had cash inflows, and there was a total of 130 billion US inflow. So that is 1,000 billion Hong Kong dollars. So prior to 08, we have a much larger balance. We talked about the Hong Kong MA exchange mechanism, and we will buy Hong Kong dollars and sell US dollars at 7.85 level to ensure that it will not fall below 7.85. And in the last few days, the Hong Kong interest rate level had to come down a little bit, and the interest rate gap with the U.S. had widened a little bit. And the U.S., if they continue to raise, to hike rates, if the interest rate gap continues to widen, we will touch the weak side convertibility undertaking. But you don't need to worry, because the MA is fully capable of maintaining Hong Kong dollar stability, and even if there is a large capital outflow.
There are a lot of numbers here on this slide. I'm not going to go into them one by one. Since 1997-98, when there was the financial turmoil, when we were subject to a major attacks, our aggregate balance, exchange fund bills and notes, foreign currency reserve assets, and market capitalization has grown by several hundreds of percent. We have not seen any large-scale short selling, and even if people would like to come to Hong Kong to conduct the double play, I think they will have to have hundreds of billions of dollars before they can do that. For our economic situation for the first quarter is quite good, so but I'll leave it to Arthur for later. Our property market. In May last year, we have launched the 8th round of measures. For about 2 months, number of transactions dropped. Starting from the fourth quarter, we saw an improvement of market sentiment. Number of transactions rose back to about 5,000. Last month in April, we saw that there was a further improvement of market sentiment, so the number of transactions rose further to 6,000. Volume of transaction starting from the third and fourth quarter last year for first-hand property has dropped because of a drop in supply. And in April, that is the part in green, we see that the volume has increased from 20% to about 40%. When it comes to the amount of money involved, monetary terms, it's about 40%. The line in blue is secondary property prices by the Rating and Valuation Department, and the other one in red is the Center City Leading Index. Starting from the beginning of this year, we see that according to the RNVD's figure, has increased by about 4.5%. We see that financial fundamentals are still sound, but there may be risks, as I have outlined before, which will bring volatility to our market. Triggering of weak side convertibility undertaking is the normal operation. This provides necessary condition for the normalization of local interest rate, which is conducive to the sustainable and healthy development of Hong Kong's economy and financial markets. If people expect that there will be ultra low Hong Kong dollar interest rate, it is unrealistic. So when it comes to borrowing, for whatever reason, they will have to be mindful of the various factors as well as risks and volatilities. I'll now defer to author, Mr. Yun. Thank you. I will now talk to you about banking supervision. You have seen this graph before. It is in relation to credit growth. In the first quarter of this year, the overall credit growth registered about 3.6, which is 14.5% annualized. Compared to last year, it has tapered a bit. Initial figures for April, we see that taking away loans related to new stocks, the rate of credit growth has slowed down. From the regulator's perspective, we usually focus on credit quality. As you see that the red line is classified loan ratio. As at the end of last year, for classified loan ratio for retail bank, it has dropped to 0.54%. For overall situation for banks, it has dropped to 0.67% at the end of last year. Compared to the average annual rate, it is far lower. So we think that the credit risk is still satisfactory. The figure for the first quarter, which is yet to be announced, we do see that it will continue to stay healthy. There are two slides about legislative work. They are mainly subsidiary legislation. The first one is the new framework of large-scale exposure under Basel III. There are two areas of work that we have to do. We have to set rules. Later this year, we will submit our proposal to the LegCo. The second part will be introduced before the end of this year to the LegCo. They target a different equity exposure under the banking ordinance. We will proceed with work on the rules by two phases. The second one is in relation to amendments to disclosure requirement. This is to implement phase 2 disclosure requirements under Basel III. On the 9th of May, we have already introduced the proposed amendment to LegCo. The third area relates to amendments on capital requirements. There are a number of areas. One of them is rather technical. It is in relation to the holding of total loss absorbing instrument held by other banks. If these instruments are held by, say, a certain bank, we will implement certain standards on their capital treatment. The other one is in relation to securitization framework and its enhancements, say, for example, to incorporate the internal assessment approach. The fourth area, back to the third area, we will introduce them to the LegCo in the fourth quarter of this year. The fourth area, it is also introduced to the LegCo on the 9th of May. It is a notice under the banking ordinance. There is a list called a specified multilateral development bank. We will add the AIIB Asian Infrastructure Investment Bank to the list to align the Basel list as updated in October 2017. The other area is in relation to resolution. You may recall that in June last year, in 2017 June, the Financial Institutions Resolution Ordinance came into effect. We have to enact a number of subsidiary legislations, one of which is related to loss-absorbing capacity requirements and its instruments. Just now I said that if banks hold these instruments, the calculation of capital may be different. For some banks, they may issue total loss-absorbing instruments. We have conducted public consultation on the framework early this year. The subsidiary legislation will be introduced to LegCo later this year. There is also one principal legislation that is related to this. It is the Inland Revenue Ordinance. We have to enable these instruments to enjoy same tax treatment as profits tax treatment, and transfer of the instruments will be exempted from stamp duty. At the end of last year, as the Resolution Ordinance came into effect, Financial Stability Board conducted a review. Their findings was that Hong Kong's regime is a fully cross-sectoral resolution regime. So this conclusion of the FSB is good for Hong Kong. I'll now move on to the use of fintech in the banking sector. I will cover 3 areas, and then I will defer to my colleague. First, fintech supervisory sandbox. In November last year, we have launched an enhanced version. There are 32 new fintech products. 21 of them have been launched in the market. We have tested the application. 18 of them are tested by banks as well as technology companies. And in October last year, we have set up a chat room in relation to the sandbox. They can come to us to ask for our views in relation to supervision. We have received 81 inquiries in the chat room. Over half of them, 46 of them, came from local or overseas technology companies directly to seek our views since its establishment from March. The second one is the virtual banking. At the beginning of this year, till March, we conducted a public consultation. We have received 20 comments in relation to amendments of guidelines of virtual banking. Majority of the views expressed support. We are collating the views, and hopefully later this month we will be able to issue the revised guideline. The third one is banking made easy. This aims to improve customer experience in the use of digital banking. Well, it covers several areas. First is remote account opening, online loan, as well as another area. We have issued guidelines last month to banks in relation to personal loan business, including loans to SMEs, how they can make better use of fintech to create more flexibility. We have received a positive response from the market. Now I'll defer to Howard. Mr. Lee, Arthur has covered a number of fintech items, and I would like to elaborate. First is a faster payment system. As you know, that is round the clock, 24/7 for transfers, cross-bank transfers, and access to payment systems. We think that it will be launched in September. Basic system development has started. We are at the stage of trial and testing. In 2 months' time, we will open the system to banks for testing on connection. Because apart from us, banks will have to put in place apps to help customers use the system to make transfers and payment. In September, when it's launched, we will launch a publicity campaign about use registration and the system itself. There is also a similar exercise, is QR code payment. It's getting more and more popular, but you might have heard that in Hong Kong there are different payment systems using their own QR code. Well, if you're a shop and you handle different systems, then your counter will be covered with different QR codes. So we have standardized the QR code standard. So in the future, you only need one QR code for different phone systems to make payment to different payment systems. We have finished with the technical aspect of this. The second one is Open Application Program Interface, Open API. This is for banks. This is to give banks a standard so that their data can be open to technology companies or third-party financial institutions to extract information for customers. Or say for example, to pull together information from different banks for comparison or evaluation, as well as financial services. It involves technical details. In January, we conducted a public consultation and received feedbacks from banks. Most of them support this direction.
We are looking at security details, and by the middle of the year, we will have a policy paper, and we hope banks can comply with the schedule, and we can roll it out and allow tech companies to develop these apps. The third area is the trade finance program based on distributed ledger technology. We talked about that before. We have the Hong Kong Trade Finance Platform, and we also have a connection with Singapore, and we need a common standard, and we hope that this can become a global platform. So the progress is along our expectations, and we will complete the tender process. The fourth area is also very important because we've done so much fintech development. We need to have human resources. So we put forward a training program, and we've expanded on that. We have 4 projects, including a startup camp. We have a summer internship to Hong Kong banks and Hong Kong MA. We have some internship quotas. We'll also have a gap year where the students can do an internship. And fourth, we have a graduate career program where they can work in the science park or other financial institutions. And then regarding stored value facilities, roughly 2 years ago we had the first batch of licensed stored value facilities, and now, given more than a year and a half of market development, we see various stored value facilities. They have different discounts, incentives, and we now have these services available for taxis, for wet markets, and so on. So given this competition, we see that the market is going to grow. And comparing the figures from the end of 2017, I won't read the figures, but you can see that growth is quite spectacular. And if you look at P2P fund transfer, we had very low base figures, and in 2017, compared to the previous year, the transfer volume had gone up 10 times, and the value also went up 167%. So that development is quite impressive. I'll touch upon the coin collection program. You will have seen a mobile coin collection vehicle, and we see that the public they are using this service. We also have some new service programs. We have the e-wallet. We can provide store value facilities. So we want to demonstrate to the small businesses that if you accept the electronic payment system, it's actually quite convenient. I also want to talk about the government bond program, the third batch of the silver bond. This occasion it will be slightly different. In the past, we will open this up to bond issuers. We have some new procedures and new systems, so this year we're still in our talks, and the issuance period will be in the third quarter, and it will depend on our progress before we can roll it out. So now I'll hand it over to Eddie. Mr. Yu, regarding the renminbi, I have 2 points. First of all, we have the Bond Connect, and as of the end of April, there were 296, some 300 institutional investors who have joined the Bond Connect. And since the implementation of Bond Connect, the renminbi bond has joined the Bloomberg index. Now, the second point I wanted to talk about is the A shares in June and September. It will be included into the MSCI. Of course, the Shanghai Shenzhen Share Connect, we will be working together to ensure that renminbi liquidity is sufficient to support the market activity. So on the other platforms, we have the green finance. On the last occasion, we mentioned that in June we will be convening a green finance conference. So we now have either issuers or investors who will join our conference, and on the second day of the conference we'll be working with the People's Bank of China, and we'll be talking about the green finance in the mainland. Regarding the bond market, we have different measures where we can develop the bond market in Hong Kong further. We had just announced a 3-year pilot bond grant scheme where we would like to encourage enterprises to issue bonds in Hong Kong. And yesterday we had conducted a press conference, and it was warmly welcomed by the market. And we also have performance, and we had quite a volatile period. In February, March, we had a Sino-US trade wars, trade friction. So we had a profit of 1.7 billion in equities. We had a drop in overseas equities. We had a loss of 7.4 billion, and our overall investment income, including interest, we had made 5.5 billion. In foreign exchange, in January, the US dollar weakened against the basket of currencies, and then it stabilized. In April, it went up. So in foreign exchange, we have 26.3 income. So our total investment income is 26.1 billion. So coming to this table, the second last line on the left, you see there's a fee payable to fiscal reserves of 11.1 billion. So in 2018, our interest rate was 4.6%. That's how it was calculated. I also want to mention that does not include the future fund. In the footnote, we see that this does not include the 2018 fee payment to the future fund because such amount can only be determined after the composite rate for 2018 is available. And lastly, our annuity plan. I'd like to give you an update. We do have very good preparatory work. We had already at the end of the talks with the insurance authority, and we foresee that in July we can disclose our subscription procedures. We've invited all the retail banks in Hong Kong to participate in the sales because we expect that they will have a very strong interest, and the banks are already working hard. We also have some APIs. We have some educational clips where we want to introduce the annuity concept and also highlight our annuity highlights. A lot of people talk about retirement planning and annuity planning, and I said that in July we will be announcing our subscription process. That would conclude my report. Thank you. We have 7 members with questions. Mr. Tan Zhanying. Thank you, Chairman. First of all, I need to commend the MA using their new set of PPT to explain the exchange mechanism. A lot of people have asked me what happens when the aggregate is used up. So the first question I have is, MA talked about their easy banking, and we also have a new manual. So the banking manual is in line with the banking practice. They want to use big data, they use facial recognition, and they can handle small personal loans. But in Hong Kong, the big data collection is very different from the mainland. I want to ask the MA, are you confident that you can achieve your original goal? Second question is the fast payment system. In September, we will be rolling out the fast payment system, but we still have 4 months ahead of us. Where will you roll it out, and how do we educate the public regarding the fast payment system? Will it be the banks, the payment systems, or will it be led by the government? So that's the second question. The third question is, I want to ask fintech development. In PowerPoint 30, you talked about there's a 2.0 FinTech Career Accelerator Scheme. Well, we see there is a competition for talent. So after the talent is nurtured, what measures does MA have to ensure that these staff will stay in Hong Kong? They won't be poached by competitors. Mr. Chan? And then I'll answer and have my colleagues supplement. Well, the fast payment system, we have banking made easy, we have facial recognition and a remote access. We can use big data. It doesn't have to be, we don't have to look at income statements, but the virtual banking also uses fintech to achieve these goals. So we have small depositors, they can open accounts, they can get loans. So the big data environment is different from mainland. We'll have Arthur talk about that. Regarding faster payments system, we'll talk about the APIs. Regarding talent, Hong Kong does have talent, but we need to provide more training opportunities, especially internship, because fintech is not just an academic subject. It has to be practiced. Hong Kong's strength is in finance. We see that the banks, they have their own programs, or they roll out programs with partners, with high-tech companies. So that provides internship opportunities. It creates a lot of job opportunities. And I think the human talent, they need to have job opportunities. So, for example, in the banking or finance, when it develops, we don't have enough manpower. So as long as you have the knowledge and talent, you are going to be able to find a job. So in the Bay Area, we are fighting over talent. So I think Hong Kong, we do have our competitive advantages. Well, we are concerned about privacy, and therefore the privacy ordinance. There is a framework for personal information, and that is quite a stringent requirement. We are aware, in our work with the industry have convinced us that the banks' data on their customers, such as a payment, their balance, the use of credit cards, and the consumption habits, the banks do have some analysis on this area, and Mr. Chan is correct. Hong Kong mainland data collection and data use platforms are very different.
Under the framework of Hong Kong, well, we have talked to the sector, and they gave us the confidence that when we introduce innovative regulatory approach, they will be able to give us very good feedback. I would answer about publicity. There are two areas. First, the Hong Kong MA will take the lead and to publicize about the functions and the use by using APIs, leaflets, posters. For banks and the products they develop, they can enhance their own publicity and marketing as well. Mr. Charles Mock, my first question is about virtual banks. I was going online. There are people who send me a question because they've been following the presentation. I have the same question. Well, when it comes to introduction of virtual banks, as Mr. Ronald Chen said, that when we went to Shenzhen, we saw some virtual banks that have been in operation for a number of years. But for Hong Kong, well, we have to consider financial stability. The Hong Kong MA said that, well, applications are made by banks. You won't lower the threshold. But there are local companies who would like to enter this sector. Would it in a way makes it more difficult for them? As a result, local banks will operate virtual banks. And there are also banks operating overseas or on the mainland would come to Hong Kong to operate as a virtual bank. Well, those Shenzhen virtual banks, if they were incepted in Hong Kong now, I'm afraid they will not be able to get a license. So you have to support the needs of innovators. Well, when it comes to, I would like to ask about cryptocurrency regulation and ICO. The chairman said that we can ask questions here. The Policy Bureau gave us some answers, and they have been repeating the same thing. Has there been any new development? I know that there is rapid development in the international arena. A lot of people keep their eyes on Switzerland, and even for South Korea, they have launched new measures. There are some local companies you have warned about certain practices, because some companies do use it to scam money. There are some companies engaged in this business, or they would like to. It's not easy for them. They have to try to find a license elsewhere first. Maybe one day, when it's too much for these companies, they will have to leave Hong Kong. So how do you help these companies to stay in Hong Kong instead of just following other people's footsteps? Who is to take the question? Mr. Chan? There are a number of questions. I would like to first speak about virtual banks. There are dozens of institutions who have approached us to express an interest. There will be an authorization guideline published soon. We have started accepting applications. Whether it's for these companies, local or overseas, well, they may be technology companies, they are most welcome to make an application. They will have to meet our licensing requirements, say for example, capital requirements. We will assess them on risk. If we issue a license to these institutions, we have to put in place measures to ensure there is protection of depositors and investors. There are a number of criteria we will take into account. First, do they introduce the use of fintech? Will they bring a better customer experience, especially for smaller clients and SMEs? Will they provide a better service? Will it achieve popular finance? The second question is about cryptocurrency. There has been a lot of discussions globally. We will be cautious because cryptocurrencies don't have the conditions to be used as a form of payment. They may be blockchain, but there is no intrinsic value. The designs of these currencies is such that you can't trace the ownership. Everything is digital. We have very stringent requirements when it comes to anti-money laundering. So we have the duty to remind the public that when it comes to cryptocurrency, you will have to be sure that you meet all the requirements of anti-money laundering requirements. Banks told us that it's very difficult for them to meet those requirements, so they have been very careful. Mr. Wong Ting Kwong, thank you. Well, that was the triggering of the weak side convertibility undertaking. How come that the exchange rate is still, well, the interest rate is still so low? I noticed that for the annuity scheme, it's been very well received. And if subscription is over $10 billion, well, how would you do it? Just by drawing lots or just by apportioning a share for everyone? Mr. Chan. The design of the linked exchange rate system does not have an active interest rate adjustment mechanism. We don't have a policy committee. As I said, that there has been about 130 billion US dollars flowing into Hong Kong since 2008. So we're talking about over $1 trillion of Hong Kong dollars, and there will be, as a result, there is abundance liquidity. Interest rate will drop. It remains close to zero. US dollar interest rate has been getting higher and higher than Hong Kong dollar interest rate. As a result, there will be carry trade, that is to sell Hong Kong dollars to earn better US interest rate. There is an outflow of Hong Kong dollars. As I said, that we have bought about 51 billion Hong Kong dollars. The result of that is that there will be a narrowing of interest rate spread. There is an interest rate difference of about 90 basis points. So the exchange level has dropped to close to 7.85, as we said that it triggered the undertaking. So we started to buy Hong Kong dollars, which will jack up the Hong Kong D interest rate, thus narrowing the interest rate spread. For the annuity, we have a subscription of $10 billion. We're aware of the warm response. The Hong Kong Mortgage Corp will carefully consider whether to increase the overall subscription volume. We have to take into account risk assessment and risk management, because with such a large amount of money coming in, we have to be able to better manage risk. In July, we will work out the details. By then, we'll have a chance to see what the actual response is. Currently, we think that it will be $1 million insurance coverage for each person. We'll have to work out the details about all the figures. Mr. Chan mentioned about the ceiling of 1 million per person. Will you increase it? For $1 million, every month you get 6,000. Well, for someone who is over 65, a male over 65 is 5,800. But that is not enough. So will you consider increasing the amount? Mr. Yun? We have a lot of flexibility when it comes to the overall subscription. It's subject to risk management. For the amount of per person, we incline to keep it at $1 million to enable more people to participate. And also from the perspective of risk management, it won't result in a huge surge of overall subscription. Next, Mr. Lo Wai Kwok. Well, the briefing of the Hong Kong MA is not brief at all, but I do think that it is rather comprehensive and is good. You say that you're very concerned about possible U.S. Sino-U.S. trade tension, and on page 12 of your slide it says that when it comes to technology products, China is located at the lower end of the supply chain. But they have joined the WTO, so they are part and parcel to the entire system. Now U.S. propose to increase tariff on technology products. It's the start of the Sino-U.S. trade war. I strongly oppose to that. Added value of a lot of components take place in a lot of other countries, US, Taiwan, South Korea, Europe. They produce a lot of these components and they are exported to China. A lot of US products are manufactured on the mainland. That's why we are very concerned. Total electronic export, that is, export plus re-export accounts for 1/3 of the total export. It covers products and also parts. So when it comes to export and re-export of parts, it's quite significant to Hong Kong. What is your understanding? How well is your understanding of the situation? Perhaps I need to ask the Commerce and Economic Development Bureau. But I'm sure the Hong Kong MA has done a lot of analysis. So can you give us more information about the impact on Hong Kong industries? We are very concerned about Sino-US trade conflicts and its development. If compromise or agreements can be reached, it will be good, because when it comes to a trade war, no one comes out as a winner. Well, there has been a lot of changes compared to 2 decades ago when it comes to manufacturing and production. The supply chain is very complicated and every chain is linked with one another.
So Hong Kong serves as an entrepot, and we make up a significant part of that trade. So that indicates that Hong Kong being a trade center and its participation. So we have some electronic components manufactured in the U.S. And if you say, if they sell to the large mainland Chinese enterprises, there would be an impact to American manufacturers as well. And so in the diagram I referred to, Japan, South Korea, Taiwan, their trade is affected as well, because they have to export components to mainland for assembly, and therefore it's very hard for us to assess, because we don't know what the results are after negotiations. It could be very extreme, or we could also have some compromise between 2 extremes. So it's very hard to predict. So what can we do? So MA import-export companies or the manufacturers in there, we hope that they don't have a disruption in their cash flow. So if you recall, even though with a financial tsunami, the epicenter was in the U.S., but it affected the whole world. So if we have a disruption in the cash chain, even if we have purchase orders, once the cash is disrupted, it has a large impact. So currently we see in the cash supply there isn't any abnormality. But on the other hand, if there's a trade war, and if entrepot trade is affected, they lose their orders. That's a large impact on the manufacturers. But from the MA's point of view, we will look at the bank cash flow. We don't want to see any negative scenarios that affect the manufacturers. Mr. Holden John, I want to ask PowerPoint slide 55. The slide deals with the mortgage. So we see, if you look at the slide, recently the mortgages are very tight. In the latest figures, we only have 50% mortgage rate. So I hope the MA can also hear these concerns. If we cannot deal with mortgage problems, the public cannot get a housing loan. So we hear that MA is taking a risk-based approach, but when the mortgages are so tight, people cannot get a second mortgage, and therefore they might have to have the interest payments, and the interest conditions might be very stringent. So effectively, it adds to their mortgage burden, and it takes up more of their income. So we see in the last few years, the mortgage payment compared to income, there hasn't been much change. So I hope that, once again, I'd like to take this opportunity. So when you have very tight mortgage conditions, you are forcing people to take second mortgages, and their mortgage payment burden is very heavy. It's also a big risk. So I'd like you to see whether you can relax the mortgage conditions and alleviate some of the burden and concerns. The second question is about the brick and mortar branches. In page 59 of your slide, you remind banks where they need to keep the retail bank, bricks and mortars, and of course smart banking, virtual banking. I support that. I support the banks developing that, because we need to move with the times. But you need to understand that a lot of the communities, a lot of the grassroots communities, a lot of elderly, they need face-to-face services. They cannot rely on internet banking, or the ATM machine cannot handle their needs. So I hope MA can bear these concerns in mind. Arthur, thank you, Mr. Chow, for the questions. Regarding the mortgage situation, if you recall, when we roll out the macro conservative measures, it has an impact on people taking loans. But we want the public to understand that the policy goal is to enhance the bank's security. So in the real estate price tick cycle, we have a responsibility to deal with the risk. So therefore, over 8 rounds of measures, we have tightened the process. At the same time, we try to cater, and we try to support the end user. For example, mortgage insurance scheme. So for the end user, it can provide some form of support for them to get loans from banks, and they can meet our 50%, 60% regulatory needs, and they can even reach an 80% loan. The mortgage insurance scheme is very popular. People benefit from it. So in the future, I don't have the specific figures. If Mr. Chow is interested, I can provide these after the meeting. Now, regarding bank branches, we understand if you look at our banking goals, an important policy is to have services available to the public. So when we promote virtual banking, we don't want to reduce the number of retail outlets. As a matter of fact, when we negotiate with traditional banks and how to digitize their services, they tell us that they understand in some communities retail branches are very important. So you can rest assured we will continue to look into that. Mr. Kwok Wing Hung. I want to follow up on two issues. We talked about the virtual currency. A lot of stuff is happening. The G20 and FINMA, they ask all governments to have a complete set of the regulations by July. We see New York, the NYSE will create a platform for virtual currency trading, and the People's Bank of China is also looking into developing its own virtual currency. It's a digital fiat currency. So that will change the whole ecosystem of virtual currencies. So being an international financial center, the regulatory authority, what is your thinking? I'd like to hear from Mr. Norman Chan. And the second, I am concerned, FATF, they are urging all the regulatory authorities around the world to ensure that our bank system will not be used by human traffickers to use as a money laundering. And I see that we do have some deficiencies and we don't meet those requirements. So regarding human trafficking, what does the regulatory authority have to prevent our system from being abused? Mr. Chan, I'll have Howard to respond to the first question, and human trafficking, Arthur can deal with that. Mr. Lee? The virtual currency, whether we have a consensus, there isn't any global consensus. Different regulatory authorities have different measures. So we have to examine it in greater detail. For example, in Japan, some reports say that Japan has acknowledged Bitcoin can be a legal currency. So we are concerned about that. We can have direct negotiation with Japan, and their approach is that there was a large exchange that shut down, led to a lot of concern, and they also have anti-money laundering concerns. So they created a law, they created legislation to allow Bitcoin to serve as a payment system, and they could register the currency and exercise some limited control. So they're still exploring how to handle it. So we don't have any prohibition against virtual currencies, but when the virtual currency enters the banking system, how can we ensure our compliance of anti-money laundering? Because the flow of virtual currency is very hard to track, and as Arthur said, we don't have a comprehensive solution, but we have an open attitude. If the banks can handle it, we can negotiate with them. Regarding PBOC issuing a digital currency, MA has looked into that, and we have looked at that with the PBOC, and each situation is different. Some jurisdictions might cover a large geographic area. It's hard to distribute banknotes, so their need for digital currency is different. But in Hong Kong, when we have an electronic wallet or electronic payment systems, then the public need is the same, we have to consider that very carefully. So that's part of our study. Chairman, I want to respond to the trafficking and money laundering question. Well, there are two issues. We have a legal framework, a local legal framework. The SARG answered Mr. Kwok's earlier question that we have human trafficking offenses in our criminal code, in our local legislation, but that's not my professional expertise, professional area of expertise. Well, the regulatory regime of banks, when you examine their accounts, will these be abused by traffickers? Is regulatory effort enough? SFTC 28, they have a report, and there's a diagram indicating how much percentage does trafficking make up in money launderers. Well, that is the point I was going to make. In last week, the report on Hong Kong, I think it is a paragraph 5.215 in the banking system. We require the banks to regulate money laundering related to human trafficking. The industry understands that, and I think most importantly, offenses related to human trafficking in our money laundering regime, we define it as the upper stream. That's part of the money laundering scheme. So banks are aware they need to exercise monitoring. We will remind the industry to keep that in mind, because later on in the year, the Hong Kong has a review under the FATF requirements. When is that review? If I recall, it should be October, November. They will do an on-site inspection.
Okay. They will talk to different units about the respective areas. Mr. Christopher Zhang. Thank you. The Hong Kong MA's view is that we have a high resilience to shocks. But there is a high risk of financial market volatility. It's not just a matter for the economy. It also involves the tensions in the geopolitical areas. Donald Trump doesn't play by the rules. So he's a loose cannon. The scope of possible Sino-US trade war is increasing. So there are a lot of uncertainties. I would like to ask Mr. Chan, have they conducted any assessments about the impact if the Sino-US trade war potential is not resolved? The FS, the FSTB, and the Hong Kong MA, have they worked out any contingency plans? That's the first question. The second one is that a lot of people are of the view that there should be interest rate increase to deal with outflow of capital. The Hong Kong MA uses the abundant supply of US dollars to maintain the exchange rate, which is a better option. The third point, I am very happy to hear from Mr. Howard Lee that when it comes to the issuance of silver bond, there is the participation of security firms. And it shows that there is room for improvement. Virtual banks, we have visited the Bay Area. There is a virtual bank which is very successful. I think their success is built on big data and smart ID to help them to decide on credits and to manage risk. However, in Hong Kong, because of privacy issues, we need to look into it. Virtual bank is the way forward. I would like to ask on behalf of the trade, will they allow virtual banks to also be a licensee of a security business? Mr. Chan, I'll try to answer as far as I can. Interest rate increase. As I've explained, that we don't have an active interest rate adjustment mechanism. If Hong Kong interest rate is high, and if there is a normalization of interest rate, that means there is capital outflow. We use US dollars to buy Hong Kong dollars. That is the result of outflow of capital. We have bought 51 billion Hong Kong dollars. That means they have disappeared from our money base. The overflowing pool will contract. Well, still there is a 1% of interest rate in Hong Kong. If there is another trigger of weak side convertibility undertaking resulting in outflow of capital and the money base further contracts, then there will be a drop in interest rate. You also said that there are a lot of uncertainties. Looking back in the past few years, there has never been a year when it's stable. Last year, when it comes to GDP growth and our financial market, we see that we have been performing really well. However, there are some problems surfacing. If these problems are resolved, then it will be ideal. If there are conflicts, the consequence may be quite bad. I think it is very difficult for us to tell. However, when we are the Hong Kong MA, the most important job is to maintain stability of the entire financial system, to ensure that the fund chain is protected when it comes to shocks. Because if the chain is broken, operation of these businesses will cease, even with production orders. So when it comes to capital adequacy and liquidity, we will do some more to ensure that where there are shocks, banks will not be shaken, and as a result they will try to recall loans, because when they are subject to shocks, they will shrink their credit, and there will be a ripple effect. When it comes to virtual bank, well, it's a banking license. In theory, the businesses engaged in by a bank can be engaged in by the virtual banks, but virtual banks will have to operate branches offering payment systems, deposit and loans, as well as wealth management or financial management. I do believe that some of them may engage in security business. That means virtual banks can engage in securities transactions that will be a huge impact on our sector. Would you consider regulating it? They may offer lower interest rate than we do. They may not charge commission, and they will offer very competitive interest rate. Please, a quick answer. Virtual banks and conventional banks engage in similar business. Before they start the business, they will have to get a license from the SFC. I don't think that virtual banks can always offer better deals. For virtual banks, the most important thing is customer experience. From our experience, we see that the way they deal with customers are different from conventional banks. So the competition doesn't lie in having cutthroat offers. Virtual banks use computer systems for payment. We are required to have agreements, contracts signed, and this and that. So we are the underdog in the competition. If virtual banks can engage in security business, then it will be a huge impact on the security firms. You are the regulator of banks. We are also part of the financial system. You have to strike a balance. Next, Mr. Chen Kin-po. Thank you. Hong Kong people using mobile phone payment will have to link with a mainland payment system. In September, you will launch a faster payment system. Does it mean that when Hong Kong people make payment on the mainland, they don't have to have a mainland bank account or mainland account? When it comes to investment, I would like to get more information. You said that we suffer a loss on the securities, $7.4 billion. Next time, please give us a comparison of the same quarter last year for ease of comparison. I would like to know why we suffer a loss from equity trading. Is it because of decisions you've made or just a change in the financial market? In September, we will launch the faster payment system within Hong Kong. It's a small amount of retail payment system. Cross-border is a different system. Well, currently we have some third-party mobile phone payment system, and some other banks studying into cross-boundary payment systems. The technology is not mature yet. Of course, if that's ready, there will be a Hong Kong e-wallet to make payment on the mainland. But that is not directly related to the faster payment system in Hong Kong. Investment income in the first quarter, but in January, before the end of the month, equities have been doing quite well in Hong Kong and globally. However, afterwards, there is quite some times of some volatility. Say, for example, an increased possibility of inflation as well as trade war tension. As a result, there is a price adjustment. It's just $7.4 billion, which is not a huge loss. In relation to making comparisons for the same quarter, well, it's a fun. We used a different valuation method compared to companies with businesses, because when it comes to the turnover of a company, it's still there in the next quarter. But if we have, say quarter to quarter comparison, it's difficult because prices changes, and our income will be subject to changes in prices. And we're different from companies with a seasonal difference. Say, for example, airliners, and they may have better performance one quarter over the other. But we will be able to provide the information after the meeting. Mr. Chan, I have heard that in September there may be cross-boundary payment system without requiring Hong Kongers to open a mainland account. It's not the case that we don't want to, but because it's difficult, and we will have to make remittance to put money into the mainland account. Well, people laugh at Hong Kong people for having to bring cash because they don't have change to give you. So I hope that it will be better for us to use mobile phone payment faster. For the comparison, well, if you give them the figure, it will be easier for for the press to having to dig out the information. That will serve to improve transparency. I understand that you're different from other companies because companies may use same time last year for comparison, but I do think that it will increase your transparency to give us the figure. When can Hong Kong people use Hong Kong account to make payment on the mainland? For Hong Kong e-wallet making cross-boundary payment, it is a goal that we would like to achieve. Payment systems will have to develop their systems, and they will have to obtain policy approval. On the mainland is something to do with the People's Bank of China. We don't have a timetable. Of course, we would like it to be as early as possible. I'd like to remind Mr. Chan that we would like to get Hong Kong people to be able to use banking services when they work, live, retire in the Bay Area.
So we will communicate with PBOC on this issue. Ms. Starry Lee. I want to follow up on Mr. Chan Ginbo's question. Hong Kong's electronic payment system. We are in a hare and tortoise match, and we hope that starting September we can catch up. But then it seems like that's not the case. I want to ask, I think you are also very concerned about this matter. So first about opening an account in China. And previously DAB had mentioned that in the Bay Area that could be a pilot program. So when Hong Kong residents go to the Bay Area, they can use a Hong Kong address as a registered address. They don't need a mainland address. So, Mr. Norman Chan, have you looked into that? And to make it more convenient for Hong Kong public, then if we can open a mainland account in Hong Kong, that would be even better. And third, as Mr. Chan Ginbo said, we can use a Hong Kong account and connect to the payment system. So could you give us more details? Has the MA looked into these options, the difficulties that we face? And I want to know, a lot of the Hong Kong public would like to know, when can we have a Hong Kong payment system used overseas? Well, let me put it this way. The first, regarding cross-border payment, whether you're working or you go travel on the weekend, some merchants don't accept cash. They can only take electronic payment, and if you can't use your Hong Kong cards, it's very inconvenient. So if you want to live on a longer basis, if you work, it's even more difficult. So we have to have Hong Kong payment system at least have it a pilot trial in the Bay Area. So the second question was about opening an account. So if you just go travel on the weekend, you might not need one, but a lot of people have a vacation home or a retirement home. They have more needs, financial needs, banking needs on the mainland. So there is a procedure in the mainland. I agree, it's inconvenient. I tried to open an account, it's not easy. And Ms. Lee mentioned that if I don't have a residential address in the mainland, can I open an account? Well, when mainlanders come to Hong Kong, they don't need a Hong Kong address. They just report their mainland address. Because I'm not a resident, how can I have an address? And second, can I create a mainland account in Hong Kong? That's a remote account. So Hong Kong can do that. I can do. So can we have an attempt in the Bay Area? So I think these are items on our checklist, and on our next step we will communicate with our mainland counterparts. Now, my understanding of the Bay Area, there will be a policy coming out very soon, and I hope that it will include making it easier on basic facilities. It's not just about the hardware, building roads and bridges. We need daily banking needs, and I hope that would be included. So once the plan is implemented, then our work should be much smoother. Mr. Chan? Well, actually, the Bay plan, we're all waiting for it, but how can the Hong Kong public have a more convenient payment? That is one of the more important agenda items. So we can't even pay when we go to the mainland. I can't even purchase soft drinks on the mainland. So forget about participating in other areas and building roads and bridges. I hope you can give us good news on the next occasion. Well, I also hope that in November we have further news. I mentioned some Hong Kong banks are developing cross-border payment systems. I cannot delve into that. We also have a large operator that is working very hard where the Hong Kong payment system can be used cross-border. It's also a development and a policy issue. So we conclude this agenda item. We have to thank the MA officials. The next issue is SFC amendment. Proposed amendments to standardize rules for prescribing professional investors in Hong Kong. And we invite SFC officials.
最尾個 item 係咪 MPFA 講嘅？因為呢個都係 SFC 啊，唔係 MPFA 嚟㗎。
MPFA 有 IA 有 IA 都有。
不 Eddie 張嘅 Eddie 喺度得。Eddie 都係咯，前兩日都揾我嚟。冇乜特別，我冇嘢問，所以我都俾佢 brief 咗成半個鐘，每一個 item 都打底，咁即係打我底先，唔使我問啦。好，我哋而家請
So let's have Financial Service and Treasury Principal Assistant Secretary take us through the proposed amendments. Ms. Chang. Thank you, Chairman. Well, according to existing legislation, professional investors under Cap 571 of the SFO They are certain categories of persons, such as insurance companies and so on. And in Cap 571, Section D, in the professional investors, we have a high net asset value investors, and these people have no less than 8 million as an individual, or they have not less than 40 million where they are trust corporations, they have entrusted assets. So we have listed that in paragraph 3. So professional investor rules also require that certain documents can be relied as evidence, and we have listed these in paragraph 4. In the last few years, there have been calls from intermediaries for relaxing some requirements of the PI rules, including the types of assets permissible to be counted and other evidence requirements. As a matter of fact, according to Section 134 of the Securities Futures Ordinance, the SFC, on request by intermediaries, has granted a number of modifications. So without compromising investor profession, we want to improve operational efficiency. So we feel that there is a need now to update our legislation such that it can be applicable to all the related persons. We want to enhance transparency, and we also want to have these standards standardized. So we're here to talk about the standardized rules for prescribing professional investors. That includes 3 areas. We want to allow the investment sum to allow certain number of assets to be calculated, and the second part is expanding the definition of corporations as professional investors, and we also want to allow the use of alternative forms of evidence to demonstrate qualifications as professional investors. So the amendments have to go through our vetting process, and we need to emphasize that this amendment doesn't involve changing any the amount of invested assets levels. So after amendment, the intermediaries, when they provide services to individuals, they need to continue to comply with their other requirements of SFC. So in other words, the amendment will not reduce safeguards to investors. So perhaps I'll have SFC, Mr. Keith Choi, take us through the amendments. Well, as described just now, the proposed amendment has 3 areas. The first is the individual investor, and currently the requirement is that if individual solely or with the partner, if they have more than 8 million, they are a professional investor. So the definition of that would include a spouse and children. So the market has always said that this is a narrow definition because these individuals, they might have accounts with, let's say, siblings or business partners or parents. So the First Amendment proposal is to take these people and these investment portfolios to be calculated. So we'll have to see if there's any written document. If there's a written agreement, we can do according to the agreement, or we can have it 50-50. Another proposal is that some individuals would use a company to hold investment portfolio, and we also propose to include these investment portfolios held by a company to be included. So that deals with the individual. The second area is allowing corporations to be included as professional investors. So an individual with more than 8 million or a trust corporation having more than 40 million is a PI. So currently, under the ordinance, there's also another method where, according to PI rules, the company's owned and the only business of the company is to hold investment items. So that proposal, our amendment to that is that the sole business requirement lacks flexibility. So we propose that sole business being changed to main business, and the so-called professional investor definition was also expanded, where the PI rules can be expanded to include all the matters under the SFC ordinance, such as banks, insurance companies, and so on. These are the companies owned by professional investors. Another proposal regarding the company is that if the corporation holds another corporation, and if that is a professional investor, and if that is wholly owned, then the corporation should also be a professional investor. So that is the proposal. The third area is about evidence. We have 3 areas where we have open documents. For example, according to Hong Kong Exchange, the listing rules, if your holding is more than 5%, then you need to make a disclosure. So that can be included in the calculation. Second, we have trust holders can also be used as evidence, and we also have professional accountants documents. Currently, it's only applicable to individuals, and in the future, we can also expand that to include professional investors. So, as Ms. Chang said just now, these amendments, after amendment, when intermediaries provide service to these people, they still have to comply with our requirements. So the investor protection is not compromised. We have Mr. Chen Zhanying, Chen Binbo, Mr. Holden Chow, 4 minutes. Chen Zhanying. Thank you, Chairman. My question is very simple. First of all, I want to support this amendment. It will standardize all our requirements, but I do have other questions. In paragraph 6, it says that in the past the SFC had relaxed some requirements. So in the past, when we have applications for intermediaries, which did it include banks, securities? Can you share with us that information? And in paragraph 7, it says the SFC had considered December 2015 and June 2016 an informal consultation. So it is almost 2 years since June 2016. Why haven't you done more informal consultation to gauge people's views?
Last question is about paragraph 11. If the portfolio is held by a number of people, if there is a written agreement, then the proportion will be calculated accordingly. Otherwise, it will be treated as equal share. But it says here that intermediaries are expected to make reasonable inquiries into the existence of a written agreement before deeming an equal share. Why can't you ask people to just tick a box saying that whether there is any written agreement? Then it will be there will be a record, and you don't need to ask intermediaries to make inquiries. Who is to take the question? Mr. Choi. The first question is about what institutions or businesses will be involved. They are security firms as well as banks. For banks, it's registered persons. Security firms are licensed corporations, covering those regulated by the SFC. The consultation process between 2015 and 16, we have consulted. We have done some sounding exercises and then a formal consultation. Afterwards, we have further consulted the Department of Justice in relation to the provisions. And that's the process is taken for us to reach this stage. The last question is about making reasonable inquiries to see if there is a written agreement. As to how inquiries are made, I think is for the trade to decide. We require reasonable inquiries because we think that in the Code of Practice for Intermediaries, it requires intermediaries to make reasonable inquiries into their clients. So when an account is opened, that is only part of the steps. If you say that, can we do it by way of a questionnaire? That may be one of the reasonable steps. Banks may decide the way to regulate it and to supervise it in a way that they think reasonable. Mr. Chan Kim Po. I support the administration's proposal to standardize and regularize these modifications. Well, how will professional investors know about their rights and obligations? What has the government done in this regard to make them aware of this? Mr. Choi. Rights and obligations of professional investors. That is something that we've always been very concerned about. That is reflected in the Code of Practice. If a person is classified as a professional investor, well, when it comes to private placement, they enjoy a bigger flexibility. That's why we ask intermediaries to do more to remind professional investors. At the same time, we would work closer with the Investor Education Center about public education to enhance awareness. Mr. Chan? Yes, investor education is very important. I don't think you want to see the interests of professional investors undermined as a result. Mr. Holden Chow, I have two questions. According to this proposed amendment, in short, more people will become professional investors. Under current regime, professional investors are assumed to have better knowledge. That means regulations will be more lax. I do understand there is such a request from the market to relax regulation. Can they tell us that you will carry out regular reviews? Because there may be more complaints. At this moment, we don't know. You will conduct a review after the law is changed. I would like to hear from the administration. I would like to ask, for corporations as professional investors, in paragraph 15 it says that, well, the term sole business lacks flexibility. It's now proposed to change to mean main business or principal business. So would you date back to a certain time? Say, for example, at different times a company may engage in different businesses. If you say that they will have to be engaged in that business for 2 or 3 years before it is classified as principal business, before they meet your requirement. Or is it the case that even when the companies just changed the nature of business 2 months ago, it can still be classified as its principal business? Mr. Choi. Thank you. First question is about regulation of intermediaries offering services to professional investors. and the law. We conduct on-site inspections into their businesses. That's ongoing. In the past 10 years, from time to time, we have conducted reviews on the topic of professional investors. So it's an ongoing exercise. The second point is sole business and principal business. It depends. When products are sold, say for example in a private placement, they have to ensure that their principal business is investment holding at the time when there was the private placement. So there is not a specific time frame saying that you have to be doing it for the past 2 or 3 years. That's right. Any other questions in relation to this item? If not, I thank the FSTB and the SFC. Now we move on to the last item. Is tax deductions for deferred annuity premium and mandatory provident fund voluntary contribution. Let's invite the FSTB, the Insurance Authority, and the MPF Scheme Authority to come in to join us.
Oh, OK。而家 table 咗佢哋喺度有啊，係。我睇一睇。佢個 PowerPoint 要 replace 啊。點啊？咩意思 ？replace。佢有啲 update 係嘛？我哋派錯咗個 version 或者點啊？佢錯咗，可能有啲資料要更正。咁咪睇佢 PowerPoint 咯。我哋印咗未啊？佢拎咗嚟應該。而家印啊，係嘛？好快啫。我一定拎走咗一個啫。佢哋有冇啊？你叫。而家派。好。佢要收翻9 set 係冇揾。佢有冇寫 revise 啊？得2份啫，都係。好，咁就我諗而家手頭上即係。
Members will have a hard copy of the PowerPoint presentation. There is an updated version. It is now being distributed. I'll now ask Mr. Zhou, the Deputy Secretary, to present tax deductions for deferred annuity premium and MPF voluntary contribution. Ms. Joan, please. Just some background information. In this year's budget, the Financial Secretary mentioned that for deferred annuity premium and MPF voluntary contribution, there will be tax deductions so that there will be more options. First of all, in relation to the policy, as you know that the MPF is the second pillar in Hong Kong. The nature of the second pillar is that it is mandatory and rigid. When it comes to improving retirement schemes, the World Bank has proposed 5 concepts. The third one is more flexible, voluntary, and discretionary. We now want to promote the market development of deferred annuity schemes and also voluntary contribution under MPF. we need a basket of tools to deal with an aging population. People can't just rely on the MPF, so we would like to encourage people to choose deferred annuity schemes as part of their retirement plan. In 2017, overall contribution is about $70 billion on the MPF contributions. 3.6 billion is voluntary contributions. We offer tax deductions for voluntary contributions. These are the proposed details. Trustees of MPF will provide a tax-deductible voluntary contribution account, TVC, under each scheme. Members, if they wish to enjoy the tax deductions, they can ask trustees to open such account, TVC. Then they can make automatic payment into this account every month for contributions to be put into it. However, there is one condition. There is the preservation requirements, which is the same as the mandatory contribution. In other words, they can't make withdrawals before the age of 65 or when they apply for early retirement, or for reasons that they have lost earning abilities. So that is the same as mandatory contribution. We put in place this condition because it's aimed for use during your retirement, so it should be preserved. Members of occupational retirement schemes may also do that, and for the amount in a TVC is fully portable. This will simplify administrative work and reduce costs. Members may ask any trustees to open such an account, so it will enhance competition and will also encourage members to make additional savings. Currently, for mandatory contributions and voluntary contributions, it will be automatically deducted from a person's salary. For mandatory contribution, there is a preservation requirement, but it enjoys a tax deduction limit of $18,000. For voluntary contribution, it is flexible, but there is no tax deduction. Under the new scheme,
so if the worker doesn't want to lose the benefits, then he can enjoy the tax-deductible voluntary contribution, and that could be an extra contribution, and that will have a tax deduction limit of $36,000 every year. So if we don't have this TVC, then you would have to separate it out. You'd have to ask which part do you want to enjoy the tax deduction and which part doesn't need, and you also need to have a deposit requirement, a preservation requirement. This will also lead to inconvenience to the employer. A will have an account with one service provider, and then worker B will have different service provider. So we now allow one account, and we can save a lot of administrative expenses. So coming to the annuity, this is a long-term insurance contract where there's an accumulation period, and then we have a stream of income to the policyholder over a period of time. So under the insurance ordinance, it's Class A, life and annuity, and it is regulated by the insurance authority, and it takes assets into a stable stream of cash flow, usually in monthly payments, and part of each payout comes from the principal. So after the end of the payment stream, the principal will all be paid out. By 2016, we had thousand policies compared to only 63,000 in 2012. So that had gone up by 186%. And we see that annuities seem to be more and more popular in Hong Kong. And there are two concepts that I'd like to explain. We have a life annuity. It's an annuity until death. And we have term annuities where the annuity period is either 15 or 20 years and so on. And some say that they'll pay up to 100 years. There's also another concept, immediate annuity or deferred annuity. So an immediate annuity means an insurance company receives a lump sum payment from policyholders in return for immediate regular payouts from the next month. Deferred annuity is premium payment and accumulation of the capital during the accumulation period and cash payouts afterwards. That's why we have these examples. For example, the mortgage company is an immediate annuity. And here the government also has a message that annuities are not suitable for everybody, even though it is a good retirement tool. So whether you should purchase an annuity or not, there are some considerations. For example, your liquidity needs, your bequest motive, your financial discipline, and other alternatives. It means that annuities are a long-term contract. You are bound to make payments for a period, and during the annuity period, you receive a payment every month, and you cannot collect that sum in one lump sum. So some consumers will feel that they have a large cash reserves, so annuities might not suit them. So this diagram illustrates the concept of deferred annuities. You can see in the first 5 years they are making payments, and then there is an accumulation period, and in the payment period, if they pay all to death, that's a life annuity. If we have a 20-year term annuity, then we have a fixed term. We also have a guaranteed portion and a non-guaranteed portion. So a lot of insurance companies, the majority of them will have a large guaranteed portion and a non-guaranteed portion. That means after they collect the premium, they can undertake a higher risk investment in order to generate a higher return. So for deferred annuities, from another perspective, we are just transferring the investment risk and longevity risk to the insurance company. So we have considered a few items. We want to encourage financial discipline, to save money, to spend money slowly, and regarding the tax incentives, there's a choice. They can choose whether they want to use MPF or to purchase an annuity. And we also won't overlap with the HKMC's immediate annuity. So HKMC, the requirement is that the person has to be 65 and has saved some money. So we can see we don't have the restrictions. We encourage people to start saving money early. So our proposal is that the insurance authority will issue some guidelines, and our proposal will have some criteria. The minimum total premium is $180,000 and a minimum payment period of 5 years, and a minimum annuity period will be 10 years, and the annuitization will start at the age of 50 or beyond. We also have some safeguards. We have disclosure requirements. They have to disclose the internal rate of return. Because we mentioned that there is a guaranteed portion and non-guaranteed portion, so we require a disclosure, a separate disclosure of the internal rate of return of the guaranteed and non-guaranteed portion, so the public can calculate the return. In the guaranteed portion, we would like a a clear presentation of the guaranteed payment, a minimum at 70%, and when the public when policy holders retire, they need to know how much is guaranteed. So we feel 70% is an appropriate level. So as I said, annuities are a insurance contract. If they die or if they lose their work, if they are disabled during the payment period, then we require these premiums to be in the savings section, and the other parts will not enjoy the tax deduction. So we have a maximum tax deductible limit per year. There's $36,000 per taxpayer, and we also have an aggregate limit for MPF voluntary contribution and the deferred annuity premium. That means the taxpayer can purchase $24,000 and $12,000 for MPF, and together it's $36,000, and they can get the tax deduction. So public education and point of sale conduct is very important. The IA will publish a list of eligible deferred annuity products on its website. The IA and MPFA will also collaborate with the Investor Education Center, and we will also monitor the point of sale conduct of intermediaries, because if there's a tax deduction, we don't want that to be used as an incentive for purchasing annuities, because some members of the public, this product would not suit some members of the public. This table illustrates people with different income levels and how much tax deduction they can enjoy. Let's take a look at a high salary. If they have a $60,000 salary, if they use the $36,000, they can save $6,000 in tax. If a low-income person, they might not make voluntary contribution of $36,000. In B, the monthly income is $20,000. Let's say they can only get the tax deduction of $12,000. They only get a tax savings of $700. So if they make a mandatory contribution of $18,000 in MPF, they can enjoy $2,800 tax savings. So we would like, by the end of this year, to submit our amendment, because we need to amend the IRO. There are also consequential amendments. So if we can endorse this as soon as possible, then in the tax year 2019 to 20, we would like this tax deduction to take effect. So that means contributions from 1st of April 2019 will enjoy this deduction. That would conclude my presentation. We can take questions. Mr. Holden Chow, Chan Bin Bo, and Mr. Wu Ji Wai. Holden Chow, 4 minutes. Thank you, Chairman. First of all, on deferred annuity, to use that to provide further retirement protection, I won't object, but I want to I note that the tax deduction limit is $36,000. I feel that is too mean. If you really want to provide the encouragement people to purchase deferred annuities, then I feel the tax deduction should be raised. People might not feel that's a large enough incentive. So the tax deduction, I hope you can raise the incentive. The second issue is the deferred annuity. If you implement that you mentioned the insurance authority will regulate the intermediaries, their sales of these annuities. So I want to ask the insurance authority, if there is any conflict, will the IA take the initiative to mediate, to follow up? Because if you do allow tax deductions, you are using government resources to promote this. And I want to ask, will the IA, do you know in the future, will they be willing to intervene to safeguard or to handle public complaints? The third area is the mandatory contribution will enjoy a tax deduction, and we welcome that. That can help taxpayers. But the voluntary contribution of the MPF over the years has not performed very well. There are many reasons, including the MPF management fees erode the savings, and it gives people the feeling that the performance is poor, but they still charge a lot of management fees. So I need to tell you that when you have a tax deduction for MPF voluntary contribution, you can do that. But I need to remind you that MPF review reform should not just rely on tax deduction. You need to tackle the problem at the root. We need to deal with the erosion of the savings through the management fees. Thank you, Chairman. Regarding tax deduction, a limit of $36,000, we received some feedback. People want a higher limit. We will consider that. And regarding the regulating of the product, we have the design and intermediaries conduct. So Ms. Hui can elaborate on this. So we are liaising with the IA when they issue the guidelines on product design. It has to meet our requirements, and the concept behind that is
eligible products will be those that can help members of the public with retirement planning, and there is sufficient disclosure to ensure to protect the rights of the public. In mid-2019, the insurance authority will introduce better protection regime, so regulation of intermediaries will improve with that new system. We have default investment scheme. There is regulation on the fees charge. The administration promised to review the situation in 3 years. Our goal is to further drive fees down. We do see that management fees has been, or administration fees of MPF has been decreasing. We'll see if Ms. Hui has something to say to supplement. When it comes to dealing with disputes and complaints, we have an established procedure to seriously deal with that, and we will continue to handle them accordingly. In relation to complaints about annuity schemes, we will conduct detailed analysis and make inquiries to ensure that the sales process is done properly to better protect the public. Next, Mr. Chen Kim-po. The insurance sector supports the administration's offer of tax deductions to encourage voluntary contributions or purchase of annuity programs. The design of these products should become more flexible, more appealing, and to cater to different needs. The sector will closely discuss with the administration about the payment period. Currently, it says it should be at least 5 years. There should be more flexibility for more choices, say, for example, minimum of 3 years. The minimum coverage, we, of course, understand that, then the administration doesn't want expectations to far exceed the outcome. The guarantee percentage will be lower the longer the tenure. That is necessary. So when it comes to whether it should be 50 or 60, I think we need to look further into it. I don't think the government wants to see that there is no product available as a result of these requirements. I echo Mr. Chow's point that the tax deduction limit is too low. With the payment period and then a 10 years waiting, so it's 15 years, your funds will be locked. With these restrictions, you will need to increase the tax concession. I propose that it be increased to $60,000. The Federation of Insurers, you see their written submission. They have set out their concerns. We hope to work together with the government to work out better products to offer better protection. Mr. Zhou, thank you. In relation to tax deduction limits, we will actively look into it to see if we can further increase it. We only have two considerations when it comes to eligibility. We want to ensure that eligible annuity products will achieve the goal of better retirement as well as protection of consumers. We want to have the disclosure of internal rate of return as well as clear presentation of guarantee payment and variant payment. There may be some fine-tuning of the design of products. Most important thing for us is that these two criteria will not be breached. Mr. Wu Jiwai, I have a number of questions. First, in relation to the MPF voluntary contribution. The preservation requirement, is it exactly the same as the MPF mandatory contribution? In other words, if I put money into it, into the voluntary account, would it be like the mandatory contribution? That means they will be excluded from your asset when you apply, say, for example, for public housing. And the voluntary contribution in the account. If one is sued for bankruptcy, if one's petitioned for bankruptcy, it will be excluded from one's asset. Is that right? This is about long-term planning for one's retirement. Annuity premium or MPF voluntary contribution. Is there any risk of default That means if something happens to the trustee, will it be the same as mandatory contribution? What about annuity premium? Is there any risk of default? Because we're talking about long-term planning. Thank you. When it comes to mandatory contribution, it means that, members have no choice. We now offer tax deductions to voluntary contributions. It hasn't changed the nature of voluntary contributions. As to whether they will be taken into account as one's assets in the means test, say CSSA, is clearly stated that cash value of contracts assets that is highly with a high liquidity will be counted towards their asset. I'm sure relevant government department will take them into account. If you ask for voluntary contributions to be excluded from the means test, and in the case of bankruptcy, that it will be protected from creditors, if we treat voluntary contributions like monetary ones, will it be abused? Say, for example, when one knows about the possibility of bankruptcy, they will put all the money into voluntary contributions. Default risk. Well, there is a compensation fund for MPF mandatory contributions. If the trustees commit certain acts to cause losses to members, there will be payout from the compensation fund. So the fund acts as a safety net. Annuity scheme is an insurance policy. If the insurance company closes or when they are insolvent, well, we hope to set up an insurance policy holder fund. If we can set up this policyholders fund, then it will serve as a safety net. If an insurance company falls, then there will be protection. We designed that the maximum coverage is $1 million. Has there been any insurers that have folded? For those engaged in life insurance business in the past decade or so, no. But there was one time when the automobile insurance company folded, and there is also one, HIH, the Hong Kong subsidiary of an Australian company, has closed down. There will be legislative amendment. Of course, we agree with the direction because this will increase the options for retirement plans. But we have got no answers to our questions. We just wonder whether the annuity premium tax deduction, annuity premium as well as the voluntary contributions will cater for the needs of the public. As I've said, when it comes to offering tax deductions, the major purpose is to encourage the public to save and make long-term plans for their retirement. There are other considerations, say, for example, whether it will be abused. But don't think about abuses. I have never thought about it being abused. The nature is the same as MPF, mandatory contribution, because you can only use it after the age of 65. For the mandatory contributions, they are excluded from calculation in the means test. That's why I ask if it will be given the same treatment. The second point is risk of default. So I want to clarify these concepts. You don't have to keep emphasizing about possible abuse. Well, if you're willing to have the money locked down till you're 65, I'm sure that it involves something more complicated. I just wonder whether something of the same nature will be given the same treatment. I will extend the meeting by 15 minutes. Mr. Zhang. I fully understand Mr. Wu's question. We offer tax deductions with preservation requirement. The nature of this is still the same, is voluntary. It's not mandatory. And as to how it's treated in the case of bankruptcy and means test, in general, we should look at it as a voluntary contribution. Well, as to whether government departments will exercise discretions, I will have to talk to those government departments because it's their policy. Before we make the legislative proposal, we will further explain to Mr. Wu our stance. That's the end of this item. Any other business? If not, thank you. See you next month. I thank the government representatives. Thank you.